Today, we're going over financing. How do you finance businesses through seller financing, through SBA, through raising capital? There's all different ways how to get money. That's the biggest thing is getting capital. We're going to go over qualifying the deal. When you get a business, how do you qualify it? Do you look at the seller's tax returns? Do you look at their POS reports? Do you look at their cash register receipts? Do you just go there and count how many people come in, clock out? Number two is SBA, documents needed from the business, which we'll go over. These are standard documents that are needed from the business, and these documents are extremely important when you're buying a business or whether you're brokering a business. Same thing for the seller. You need to get all the seller's documents, the buyer's documents. I'm going to go over SBA rates. I'm going to be going over seller financing rates, the art of financing, how to get paid from the bank when you refer them a loan, what notes should look like, how to make them assumable, and working with me. You're working with experience, working with people that I've developed relationships over 10 years with, and I can give you all their contact information. It's extremely important to understand the financials when you're getting a business. All these baby boomers, all these business owners, they don't really record what they make. If they're making $1 million a year, they're writing off as much as they could, and they're saving as much as they could with taxes. That's just the way it is. So how do you really get these things financed? Because a lot of these institutions, they're going to look at the tax returns. So how do you bridge that gap? The way you bridge that gap is you work with me. I'll show you how to bridge that gap. Understanding the business owner's financials. When you look at a business, no matter what, you should get 3 years of tax returns, 3 years of profit and loss statements, and 3 years of balance sheets. You want to just have this information. It's not going to really depict what the business is making because there's so many personal add backs, there's so many write-offs. Again, all of these baby boomers or business owners want to save. It's important just to get them. Also, making a projections deck, which I can send to anyone that wants to learn about how to make projections, is crucial when you're going for an SBA loan, because the SBA is going to take those projections and take them seriously if you paint a good picture. So you're going to need all these financials. You're going to need projections. You should really look at businesses that are growing in the last 3 years. The SBA likes that a lot. And basically, you're going to have to get involved in getting personal add backs from the seller. So for an example, I have a car wash listing. The seller sends me his tax returns. I can't really see what the car wash is doing from the tax returns. So then I go into the tax returns. I find out how much he puts himself on salary. I find out how much depreciation he has, which is right here, amortization, interest, and other deductions that are personal deductions that he puts through the business. I add them back and I get that net income on paper. That net income on paper is what the banks can loan on. So that's the seller side. You want to get 3 years of tax returns, 3 years of profit and loss, 3 years of balance sheets. You want to also put a projections deck together for the seller. Seller, you need all that information. Buyer, you need to know where the liquidity is. Where is their cash? Is there cash in the account? Is there cash with their mother? Is there cash with their cousin? When you're dealing with SBA, they want to see seasoned money. That means they want to see money that's been there for a while. So if you have an account with $1 million that's been there for a long time, that's what they want to see. So that's just as far as SBA. Also, you want to prepare a personal financial statement if you're buying a business. If anyone wants a copy of a personal financial statement, just shoot me a message in the chat and I'll send you a copy of a personal financial statement. Basically shows what your net worth is, your assets, your liability, and what your net worth is. So you want to prepare that for yourself or for your buyer if you're brokering a deal. You want to put a nice bio together on yourself or your buyer. You want to beef up your experience. Even if you're not in the car wash business now, but you worked in a car wash as a kid, you want to put that in. That's important. You want these SBA loan officers to know that you had experience. That's going to help the loan. So that's understanding the buyer's strength. Beefing up the experience. Like I said before, you want to let the SBA know that you've been in the business before. You might not have owned them, but you've worked with them as kids. As a kid, you have experience running them, and that actually helps a lot. So SBA rates right now are 8.5%. Prime is 8.5%. Right now I'm doing deals 8.5 plus 1 or plus 1.25. So loans from the SBA are 9.5 to 10% right now. These are 7A loans. These loans for the business or over 10 years. All right. So a way to figure out a loan is to go to Bankrate. If you want to figure out a loan schedule, go to bankrate.com and then you go to the amortization and then you can plug in whatever loan you want and you can see the monthly, how much it's going to cost you monthly. That's just a little tip for everyone. Bankrate.com. So these are the SBA rates, 9.5 to 10%, 10 years. If you buy the property, it's 25 years. So the property is over 25 years. The business is 10 years with the SBA. This is a 7A. These are maximum $5 million loans. Now we get into the best financing in the world. My favorite, seller financing. This is the best financing because everything is negotiable. This is the Wild West. If you know what you're doing, like when I go into a deal, I'm ready to go. Like I know I want 25-year term, assumable note, no prepayment penalty, trying to get that rate as close to 6 or 5.5 as possible, trying to amortize it as long as possible, getting balloon payments. So there's so many ways to negotiate this. And this is the point of this webinar, is to talk about SBA versus seller financing versus raising capital. So benefits of seller financing. You keep the seller in the game, skin in the game. The seller is your partner, basically. So I'm doing a car wash deal. We have a deal of $2.5 million. I'm putting down $1 million. There's a $1.5 million note. The seller's holding it over 25 years at 6%. So after I pay that note, I'm still left over with $250,000. So it's a 25% return, cash on cash return. The seller is with me the whole time. He's only getting paid $1 million out of the 2.5. So he's basically my partner. So that's what I love about seller financing. You keep them in the game. Another great benefit is a faster process. You don't have to go through underwriting. You're not asked a million questions. Like I'm dealing with the bank now. I need to get the personal budget of the borrower. It's just so much work. So when you're dealing with seller financing, you don't need to do all that underwriting stuff. It's a much cleaner, faster deal. But the trick is to get the seller to finance the deal for you. And that's building the rapport, building the relationship. Faster process. And then also the best thing about seller financing is the business essentially pays your loan. So I'm buying this car wash for $2.5 million. I'm only putting $1 million down. I'm only buying this car wash for $1 million. That's how I look at it, because the business profits are paying my debt. So if you can get seller financing, you're going to win, but obviously you have to do your due diligence. So if anyone wants a copy of a seller financing note, just shoot it in the message. I can actually get you a copy. That's the benefits of being on this webinar. You have 10 years of my experience right in a single webinar. So if you want a copy of a seller financing note, shoot me a message. I'll get you a simple copy that can work on a deal for you. This is the biggest myth in buying businesses. All these influencers, they say that they can buy businesses with $0 down. Very, very hard. It's not easy to put nothing down. The only way I've seen it done is if the property is included with the business. I love car washes or even laundromats. Let's use laundromat for an example. So if you have a laundromat property and business for sale for $1 million, the property is worth X, the business is worth X. If you're able to convince the seller to take a second position, any type of institution wants a first position. First position means that if the buyer defaults on the business, the first position, the bank will take it back, right? Not the seller, the bank. If the seller's in second position, the bank comes first, the seller comes second. If you're able to convince the seller to take a second position, get most of his money up front, have him seller finance a portion of it. Let's say it's $1 million. The bank is let's say the property is worth $500,000 and the business is worth $500,000. You're asking the seller to finance $500,000 on the deal. In the second position, he's getting $500,000 from the bank and he's financing the remaining balance, which is $500,000. How do you pull that off? You have to figure out other collateral. If you have a house, or even if you can convince the bank to take a second position on the laundry equipment, have the seller take first position on the equipment, have the bank take first position on the business. There's creative ways to get these businesses and properties for $0 down. I did it, so I know how to do it. And I can go into that in the next webinar. It's really convincing. It's really rapport with the seller. If you can convince a seller to get into a second position, you can get a business and property with $0 down. So that's another topic. Structuring the seller financing. As a buyer, you don't want to pay a prepayment penalty. You want to make sure that there's no prepayment penalty For an example, a standard prepayment penalty is 3-2-1, 3% first year, 2% second year, 1% third year. That's a big number to come up with. Say you refinance, you don't want to have to pay that 3%. So in your seller financing docs, you have to make sure that there's no prepayment penalty. You want the seller financing to be assumable. It's very important for the seller financing to be assumable. When you sell your business, you want to transfer that note that you have with the seller. So going back to the car wash, I have $1.5 million note. I want to transfer that over to the new buyer. So I'm going to stop there real quick. I talked a lot. Does anyone have any questions you could throw in the chat? How does the bank review accept add backs as legitimate? It's a great question by Penny. The bank is going to look at, they're going to cross-check everything. They're going to look at what you claim as your personal add backs. Then they're going to look for evidence. They're going to look at your bank statements. They're going to look at, what your car payment is, how much you paid through the business, your car payment. Do you pay life insurance? What your life insurance payment is, that's an add back. Your health insurance. So they're going to double check everything. What if you're starting the business from scratch? If you're starting a business from scratch and you have experience, then you should put together a business plan and you should put together projections, and the SBA will give you a loan if everything adds up. I can help you with that too, whoever asked that question.
How do you protect yourself when selling a business and having a buyer go behind your back directly to the seller?
It happens all the time, and that's a phenomenal question, Nasir. I just had that happen to me. Been working on a deal for 3 years. Seller and buyer go behind my back, and I just found out the way to prevent that is to have ironclad agreements. Any buyer that you bring to a business needs to sign an NDA that has a non-circumvent in it. So if you don't know what a non-circumvent is, it means if the buyer goes behind you, they automatically owe you the money. You need to have that clause in there. Every seller has to sign an agreement with you. You can't just do a handshake deal anymore. I've learned that the hard way. I've got screwed out of deals. People still try to screw me out of deals. But if you have your documents in place, your NDA, your signed listing agreement, I also, once we have an LOI, I also hit them up with a second commission agreement that just validates the deal as well. Are you looking to sell businesses and have people bring you deals? Every day we look for people that want to work at Headstone. We work with referrals. There's all different ways we can work together. Take us through a seller financing scenario that you try and negotiate on your deals when representing the seller. Take us through a scenario. That's a great question. So a lot of these sellers are enticed by cash. Everyone's different, right? You have to know who your end user is. So if I'm dealing with an old school guy that's been in the cash business for 30 years, that loves the green, and I know that attracts him, I'm gonna go that style with him. I'm gonna say, Mr. Seller, I will give you a balloon payment in cash. I'll pay your note in cash. Obviously, I report everything, but he likes that. So I would hit him up that way if it's a baby boomer. If it's someone that doesn't care about cash and cares about interest rates, I would give him what he wants, but I would want it on my terms. I would give them their price. So they're asking 3 million. I would give them the 3 million. No problem. I'll give you 3.1 million. How about that? But I want the debt. I want to come up with 10-15% down. I want you to hold it over 20 years. So your price, my terms. If you want my price, I'll take your terms. And they're like, no, I want my price. But they don't understand that, which is good, that our terms as the buyer is what we want. So you play that reverse psychology on them, and that's how I'm getting all these deals done, is I'm getting the creative financing. So I hope that answers your question. When mixing SBA and seller financing, do you ever run into issues with SBA lender? Yep, of course. That's a great question. So a lot of these SBA lenders, they're strict. They want the seller financing notes to be the same exact term as theirs, which is not beneficial really to the buyers. So sometimes we do side notes, which, you don't even tell the SBA. Just, as a buyer, you got to get creative. You don't even tell the SBA about. So you have a side note. Maybe you're doing a note on the inventory. You make that separate, but that's really for the business. You got to get really creative. A lot of these business owners like that. Usually SBA lenders want 10% seller financing or 5% seller financing. I like to do more and have side notes, so it's less capital down. And we could talk about that in other webinars too. That's a separate topic. That's really proprietary information. So I'm going gonna have these webinars every week. I think it helps a lot of my brokers and also people that want to just join the webinars. I think I'm gonna do it every Thursday, same time. So definitely just, DM me on IG or however you message me that you want to join the next one. I gotta figure out what I'm gonna be speaking about, but it's gonna be definitely beneficial for everyone.